Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, it's the gift that keeps on giving, the Indian equity market, and new highs yesterday in trade, and we were positive throughout the session, especially for the benchmark.
Absolutely. 19,300 on Nifty, 45,000 in terms of Bank Nifty.
Yes.
And 65,000 in terms of Sensex. So three milestones in terms of record highs that we've been tracking, Alex. And clearly, it's a fourth consecutive session of gap up opening that we've seen in overall in yesterday's session. However, now there is some bit of consolidation that will start creeping in, and we're seeing that at 19,300 kind of levels on Nifty.
Especially if you look at the flows yesterday, the FIs continue to buy. But you had the domestic institutions that had a net sell figure, which indicates that people are booking at the higher levels. But interestingly, in yesterday's session, you saw quite a bit of participation from the banks, and particularly the PSU bank pack. As a whole, the index was up over 3.5%, 3.6% at the end. So that's quite significant, the participation from the banks.
Absolutely. And the PSU banking space is now coming in the limelight once again. So clearly, let's quickly just look at the technicals. If you see, if on the downside support on the Nifty, 19,000 is what we're tracking. And there is 19,500, which is acting as a stiff resistance as well on Nifty 50. Now, there could be some consolidation in that 19,400 to 19,500 kind of a range. And it's interesting to see how the base for Nifty is actually shifted to 18,600. So any profit booking should be treated as a buying opportunity till the time 18,600 actually gets taken out as well. And that's what analysts are pointing towards. Now, if Nifty gets close to 19,500, what analysts are indicating is that you should switch your longs to hedged longs. So that's going to be an interesting strategy that we should be watching out for. But overall, in terms of Bank Nifty as well, clear support coming in at 45,000 levels, and overall 45,500 is what will act as a strong resistance in terms of Bank Nifty. So clearly, participation of Bank Nifty becomes absolutely crucial to see this next continued leg of up move. But there will be some bit of consolidation. Selling at higher levels, again, buying at lower levels is going to continue. The F&O data also, Alex, if you go to see, is giving us some interesting data points. Now, clearly, there has been a short covering rally that we've seen in terms of the markets. Call writers are actually exiting the 19,100 and 19,200 strikes. And that is what is actually helping Nifty as well to end in the green for almost 4 to 5 consecutive sessions. Now, market participants have continued to initiate their long positions as well. And the interesting bit is both your call writers as well as your put writers are actually trying to battle it out to see how they can dethrone Nifty. So that's an interesting trend that we've been picking up. Now, the 19,300 strike, that is going to be a crucial level we should be watching out for today, because that the option data that comes in there, whether you're seeing higher call writing or higher put writing, will actually help you understand as to what direction that the markets will take in today's session. So watch out for these data points pretty closely in trade today.
Yeah, and certainly cues from overseas a little muted at the start today. The Asian equity markets trading just a little wobbly. And of course, the US markets closed today on account of Independence Day in the US. But we were talking about the Nifty Bank. I think the focus is going to be on individual names in the banking space, and two very important stories to talk about with regard to IndusInd Bank as well as IDFC First Bank. And we've got BQ Prime's banking and economy editor joining in to give you perspective on both of them. Vishy, good morning to you.
Good morning, Alex.
Let's start with IndusInd Bank. Sure. And this is the update that says that the promoter has approved raising its stake to 26% in the bank from 15%. What's the context?
Right. So, Alex, what the approval is actually a fundraising approval. So they're going to raise about 1.5 billion. The promoters of IndusInd, which is IndusInd International Holdings Limited (IIHL), and the point that the promoter has been making through its statements is that this money will be used to raise their stake in IndusInd Bank from about 15% to 26%. That is something that the regulator, the Reserve Bank of India, has allowed to these promoters. Apart from that, the money is also going to come in handy because they have to pay for Reliance Capital as part of their purchase plan. That is under insolvency that the Hinduja Group has won as a sole bidder for Reliance Capital's assets. That includes life insurance, general insurance, asset reconstruction company, a little bit of the asset management company and stuff like that. So all of that comes in to the Hinduja Group promoters, and this money is going to essentially help fund these two purchases. The other thing that the promoters have also said is that they want to invest further in the BFSI segment. So they want to buy an AMC. They want to invest in banks outside of India as well. So this money is obviously going to help in doing all of that, Alex.
Just to follow up on that, this stake increase will take place over a period of time?
Yeah. So as you said, it's about 1.5 billion, right? That's the money that they're going to raise. So what is going to happen is that about $1 billion will go into just raising the stake in IndusInd. Similarly, for Reliance Capital, it's about a 1.2 billion investment. So you will need more funds a little later, and all of these investments cannot happen in one go. So obviously, it's going to be over a period of time that this money is going to come in.
Right. And overall as well, if you see in terms of the stock, a 4.5% up move is what we've seen in the last 4 to 5 trading sessions. But apart from this, an interesting one, Vishy, is in terms of what's happening with the IDFC twins now, right? After HDFC, you're talking about IDFC first actually coming in terms, the merger. Now, the board has given it an approval. If you see both the stock prices as well, IDFC surged to a 52-week high in yesterday's session, and a 6.5% up move is what we've already seen. And you have an IDFC First Bank, which closed almost with 3% kind of gains.
Yeah.
The reason I find this interesting is 2015, I think, is when they demerged and they got the banking license in terms of the IDFC Bank side of it, right?
Correct.
And now again they're coming back together.
Yeah. So it's literally that bank license that's leading to this. So when the bank license was granted to IDFC, they were given a very clear pathway. Over 5 years, they have to reduce that stake and essentially not be the promoter of the bank. So that is what was given as part of the licensing agreement, and that they had to do that. So in 2018, when IDFC Bank merged with Capital First and the bank became IDFC First Bank, essentially then the timeline got extended a little bit, and now finally that is happening. So it's interesting that you mention HDFC, Hiral, because ideally, this transaction predates HDFC. This discussion has been happening for many years now. In fact, in 2021, September 2021, the shareholders of IDFC voted against the appointment of Vinod Rai as the chairman again because of the delay in this merger. And then Anil Singhvi came in last year in April 2022. IDFC sold its asset management unit to Bandhan Bank. And then now finally in July of 2023, we are seeing the merger getting the approval. So, there's still a record date pending. There's still an effective date pending, and of course, a whole host of regulatory approvals pending. It's only after that this merger will actually take shape. But yeah, the date is interesting for sure.
But, of course, the context is important to understand as well. That swap ratio that was announced, already people talking about the fact that it favors IDFC and IDFC shareholders, because if you look at the implied price, it is 20% premium to yesterday's closing price. Could there be issues around that, or why is that taking place?
There's no real issues as such, because it's a planned merger, right? The whole idea is that this consolidation has to happen. Now, of course, it has gotten delayed, and therefore one could argue that the price is less important than the actual event. But then that's an argument I'll let the bank make and not myself. But we do have an interview lined up with V. Vaidyanathan, the MD and CEO of IDFC First Bank, a little later today. So do tune into that.
That's at 10 a.m. today?
Yeah, about 10:15, and then we can show off what he has to say about this merger and the pricing.
And yeah, absolutely. The pricing is going to be critical to watch. Tune into that. Vishy, thanks so much for joining in on that one. Certainly, 2 stocks very important to watch out for. Rather, 3 stocks you should watch out for: IDFC First Bank, as well as IndusInd Bank in trade today, likely to be buzzing in trade. The auto pack is what we were speaking about yesterday on account of volume data that came in over the course of the first few days of the month. And Hero MotoCorp was a clear focus point on account of the decline in volumes that it reported in the month of June, 10% lower than the same month a year ago. And we were talking about premiumization that is coming in as a strategy, the losing out of the 100cc motorcycle. And in that context, the tie-up that Hero MotoCorp has with Harley Davidson and the first launch of a product with that partnership is going to be important to focus on. We've got Mihika who's joining in to tell us a little bit more about what is at play here. Mihika, what are you picking up?
Yes, so the Hero Motors and Harley Davidson partnership has officially unveiled their first motorcycle, the X440. It is an oil-cooled power single-cylinder 440cc engine motorbike, and the price point is set for between the ranges of 2,29,000 to 2,69,000 depending on the variants. Manufacturing of the bike will take place at the Neemrana plant of Hero MotoCorp, and the motorcycle will be available in three variants, which is Denim, Vivid, and S, at all Harley Davidson dealer networks across the country. Also, this morning, Dart Research has come out with a research report on their take on the industry players. Firstly, Bajaj Auto is also expected to launch their entry-level Triumph at an affordable price band in the Indian market. Dart Research believes that the Triumph and Harley will mark Hero Motors and Bajaj's entry into an iconic premium motorcycle segment. The brokerage believes that the launches have been timed appropriately amidst Royal Enfield's growing maturity in the category and the new bikes pose ready to offer a large replacement demand. Thus, the resultant increase in the product options in the markets will have an impact on Eicher's volumes, says the brokerage. Dart Research also believes that Royal Enfield's volumes may get impacted due to the availability of the affordable Triumph and Harley on increase in the product options. And one would argue that Royal Enfield has faced competition in the past, but Dart believes that this time is different as the competition is two globally well-known brands. The products will also be supported by experienced and established mass market players that have both the financial and the distribution muscles. This may dent Eicher's aspirations to gain significant market share in the global mid-size economic motorcycle that has been aiming at in the overseas markets.
Interesting.
And overall, if you see, this is a good foray for Hero as well with regards to their premiumization strategy, I beg your pardon. But clearly, what's going to be from here on, but what we need to watch out for is going to be what's the competition going to look like between Eicher, Triumph. Triumph will be coming up with their announcement in terms of the launch price tomorrow. I think it's tomorrow mostly.
Okay.
And you have a Harley Davidson that is coming in as well at an affordable price. So the competition and the market share that they will be taking away from Royal Enfield, because they have been the dominant
kings,
players
yeah.
as well, right? So that's going to be absolutely crucial from here on.
Mika, thanks so much for that update. Interestingly, we were speaking with a motorcycle aficionado in our newsroom itself, and what he was pointing out is that the lack of a two-cylinder engine. So this is a single-cylinder bike.
Yeah.
And so what Triumph comes in with in terms of pricing is going to be very, very crucial to watch out for. If it is very competitively priced, then that is a challenge to Harley Davidson and Hero. But let's also remember that Eicher's or rather Royal Enfield's volumes continue to tick up at a very, very healthy rate. 30+%.
In fact, if you see, there's been a degrowth in terms of two-wheelers, but it's the premium segment
Sure.
which has seen growth. So now we're looking at two segments in the two-wheeler space: the premiumization, where you have these three players who are coming in as competition, and the entry level, which is now starting to face stiff competition from the EV segment
Yes.
as well. Now, how this entire math is going to play out for the sector is going to be interesting, because you already have another company, Alex, which is Tube Investment. Now, they have, their EV arm has already got a 1,200 crore investment from multiple PE. This is what they had raised earlier. And now, and this was a part of a 3,000 crore investment that they were looking at for their EV arm. Now, they've actually forayed into the commercial EV segment to acquire stake in Jam Auto. Himansh is with us. Good morning, Himansh. Tell us more. Himansh, good competition coming in for the EV space. What are you picking up with regards to Tube?
Right. Good morning. So Tube has definitely been making a lot of progress in this sector, and so Chennai-based and Murugappa-backed group Tube Investments and their EV arm, Tube Investments and Clean Mobility, has just inked a deal with the automotive director JM. Mr. Jayachandran have entered into an agreement to pursue a business through their subsidiary, which they're going to be floating out very soon. Broadly, JM is engaged in design, development, testing of and manufacturing of automotive components in the EV space. TI Clean Mobility will be investing 160 crores, whereas Mr. Jayachandran himself will be footing 40 crores, suggesting an equity split of 80 and 20. This is the fourth addition to the TI Clean Mobility's EV platform, and their chairman, Mr. Arun Murugappan, also noted that this goes a long way in their pursuit of providing end-to-end solutions for logistic companies and enterprises for intercity, intracity, and across the city last mile solutions. Given the fact that the association helps TI Clean Mobility leverage some key capabilities of JM, such as in-house design and product development, they have also entered into a partnership and have entered and signed a definitive agreement for purchasing half the stake in JM Automotives through primary subscription and secondary purchase of shares summing up to 206 crores. The stake acquisition is expected to be completed by the 1st of September. And it's interesting to see how these synergies are going to be playing out with both of these companies at play and joining arms. And what could be one of the most lucrative segments in the EV space, the small commercial vehicles.
Certainly. Thank you so much for that update, Himansh. And as you were pointing out, the EV space is going to be very critical to watch, not just from the perspective of the OEMs, but also from the perspective of the creation of supply chains, because anytime you have an automotive company set up a facility, always you'll have to look around that cluster to see the companies that operate with it. It generally pulls a lot of auto anch players, which incidentally, the auto anch basket has been in focus. The stocks have been running up quite a bit recently.
Absolutely. So I think that's a segment we should continuously watch out for, taking the premiumization strategy and the entry-level strategy into consideration.
And all of that in the context of rural demand with the monsoons and the distribution of the monsoons catching up right now. But let's focus on quarterly updates as well. There are quite a few companies, including some big financial names that have come up with their quarterly updates. And Varsha is joining in to give us some perspective on that. Varsha, good morning. What are you picking up?
Good morning. And so today we're going to see four quarterly updates, the quarterly updates for four companies. And let's start with Bajaj Finance. So Bajaj Finance Q1 update, if you see, fresh loan grew 34% year on year to rupees 99.4 lakhs in Q1 FY24. Now, the AUM, if you see, the AUM, that is asset under management, grew 32% year on year to rupees 2.7 lakh crore till June 30th, 2023. Now, this suggests that the disbursements were really strong across major product segments. And if you see, the Bajaj Finance has increased its AUM. That was the highest quarterly ever increase in its AUM of rupees 22,700 crore in Q1 FY24. And the deposits rose 46% year on year to rupees 49,900 crore in Q1. Now, if you see the next business update that we have is South Indian Bank, the advances grew 2.8% quarter on quarter and 15% year on year, while deposits grew 4.2% quarter on quarter and 8% year on year. Now, the CASA ratio, which is actually very important for investors, the CASA ratio for South Indian Bank came at 32% versus quarter on quarter 33% and year on year 34.4%. Now, coming to the next business update, we have Avenue Supermarts that operates D-Mart, one of the largest super chain markets in India. Standalone revenue grew 18% at rupees 11,584 crore, while this revenue growth implies that the same store sales growth was in mid-single digit in Q1. Now, if you compare this with V-Mart, which is again an omni-channel value retailer, revenue grew 16% year on year to rupees 678 crore, while the total number of stores that the V-Mart will have as on 30th June 2023 is 431 stores.
In fact, thanks, Varsha, for getting us. So South Indian Bank already saw a good move in yesterday's session. Yeah. The stock ended with gains of around 7 to 8%. And interesting to see how Avenue Supermart also has seen a growth in terms of the standalone business. So it seems that the first quarter will be a good number that we could be looking at. V-Mart, a similar trend that we should be tracking.
Thanks
so that's with regards to the quarterly updates that we've been tracking, but a few more companies from the metal and mining space also that reported their quarterly numbers. Rishi has been tracking the space pretty closely. Rishi, what do you have for us specifically? Vedanta, Hinzink and Coal India.
So firstly, the coal output for India as a whole, it rose by 8.4% to 223 million tons, and of this, Coal India produced 175 million tons. Similarly, the coal dispatch grew 6.8% to 240 million tons, with Coal India's offtake being at 187 million tons. So seeing this level of offtake, this level of increase in offtake has enabled India to have a comfortable coal stock position at 107 million tons, reflecting a growth of almost 38%. This also reflects to a rising demand for coal. Now, coming to Vedanta, we have a long list of updates covering each of its businesses. So let's get on with it. With respect to one of its largest businesses, which is aluminium, the alumina production at Lanjigarh refinery fell 18% year on year to 395 kilotons, while the aluminum production, it increased 2% year on year to 579 kilotons. Now, coming to Hindustan Zinc, its flagship zinc company, it had the highest ever mined metal production at 257 kilotons, which grew 2% year on year. And this was on account of higher ore production, primarily at its Rampura, Agucha, and Kayad mines. Now, the refined metal production was at 260 kilotons, which fell 4% quarter on quarter, of which the integrated zinc was at 209 kilotons, and while the refined lead production was at 51 kilotons. Now, with respect to its international business in zinc, the production grew 1% year on year, and this was primarily driven by the Black Mountain mine of Vedanta in South Africa, which increased 29% year on year. Now, coming to its oil and gas business, its average gross production was at 1.34 lakh barrels per day, which fell 9% year on year, of which the daily working interest production for Vedanta was at 86,000 barrels per day. Now, Rajasthan, which accounts for a majority of its oil and gas production, the production over there was down 12% year on year. Now, with respect to its iron ore production in its Karnataka facility, it was at 1.2 million tons, and it was down 9%, while the pig iron production increased by 13% year on year. The sales, on the other hand, fell 13% year on year, and it stood at 1.1 million tons. Now, the steel production was at 324 kilotons, and it was up 20%, and this was because of higher production capacity post debottlenecking that Vedanta carried out. Now, coming to its copper production, with the cathode production in Silvassa was at 31 kilotons, and it was down 19%, while the Tuticorin smelting operations, they continue to remain halted. Now, coming to its power sector, the power sales was at 4,266 million units, and this was up 19% year on year. And with respect to a majority of the power sales which come from TSPL, it stood at 2,830 million tons with almost 90% plant availability. Now, the wind power generation was at 130 million units, and this was down 13%.
Okay, so quite a bit to analyze, and of course, thanks so much, Rishi, for that update. All of this is available on the website for you to read in case you miss any of the numbers that Rishi rattled off. And of course, you can watch this again just to reinforce some of those bits. But to tell you a few more stocks that we have on our radar, the telecom space will be important to watch, both Reliance as well as Vodafone Idea. Vodafone Idea, because it has hiked its base tariffs. This is quite a while since it has done that. The minimum recharge is now 155 rupees for 24 days validity. And that is an important update because of the amount of collections that Vodafone will probably take from this. Of course, Reliance Jio continues to disrupt the space. And this is with regard to the 999 phone that it is selling. It will initially be a beta trial for the first 1 million Jio Bharat phones, as it is called, and that will start from the 7th of July. This includes unlimited voice calls and 14 GB of data at 123 rupees per month. And this is interesting, Hiral, because if you harken back to Reliance Communications, this is kind of what the strategy was right at the start, selling a phone, a device with a certain amount of data and calling facilities available.
You had the CDMA phones.
Yes.
You had the Garuda, which came into play, and I think Jio was Kar Do Duniya Muthi Mein.
Exactly. So it is a little bit nostalgic for some of us that remember the launch of telecom services on handheld devices. But anyway, let's talk about Genus Power as well. It has won orders worth 2,207 odd crore rupees for smart prepaid meters. The current order book, by the way, of the company stands at about 4,400 crore rupees. Adani Transmission in focus yet again. GQG Partners has raised its stake again. It's bought an additional 3% stake worth 2,630 odd crore rupees. And that takes its overall stake to over 6%. This transaction was done on Friday. And finally, Adani Green, the board will meet on the 6th of July to consider a fundraising. And of course, in the primary market, where we're seeing a spate of issuances yet again, Senco is the company that we're focusing on today. It has launched its initial public offering opens for subscription today. Sajid is joining in to tell you all about that company, what you need to know about the issuance. Morning, Sajid.
Good morning.
You've had a busy morning. What can you tell us about Senco?
It's an IPO which is opening today, nearly 405 odd crores, which has been raised, 270 crores in fresh issue and 135 crores offer for sale. Private equity Safe Partners is exiting through the IPO. Price between 301 to 317, which prices the entire IPO or the market value of the company to roughly 2,500 odd crores at the upper end of the price band. They're going to use this money for working capital requirement because of the expansion plans they have in the retail space. Senco is a Kolkata-based jeweler. They have two model company-owned retail outlets as well as franchisees. In the franchisee model, they retain 6% of the gross margins and pass on the 12% or 12 to 14% to the franchisee. So that's how the franchisee model is there. 170 odd stores which which includes 65 35 or 60-40 ratio in company owned and franchisee retail outlets. So it's going to be interesting when jewelry maker coming after some time. The last one we saw was from the South Kalyan coming in, got some good response. This one will also is expected to see good response because of the kind of the private equity backing that it has, and also the fact that they have an interesting franchising model which is there.
Right. And it's going to be interesting to see as well, because Kalyan itself is trading at a much discount with regards to what Titan is, right? The premium that Titan is demanding. Now, with that, with another player coming in, does it really steal the valuation from a Titan is something we need to see.
You cannot steal away the premium of Titan.
The way the business is working, and now that these players are getting listed, right? So obviously the concentration was always on a Titan from a jewelry perspective, but now you have players that are coming in. So the options that people have to invest in the segment, right?
You have to look at how their strategy pans out, right? Titan over a period of time has moved into studded jewelries, accessories, and others, and that account for a lot of business and percentage of revenues. Kalyan, South-based company, started off with gold jewelry, now in getting into studded jewelry,
and also moving to a franchising
model, which is there. That's because your margins will come only in the studded model. It doesn't come in the gold jewelry model. In the gold jewelry model, it's around 6 to 7% margin.
It's
the moment
uniform,
and the moment you go up to studded, it goes up to 10% or so in jewelry business. Senco, 85% is coming from gold jewelry, and they moved, and 11% coming from studded, and they plan to move to more studded jewelries. And that can only happen in the northern India, because if you look at the gold consumption or jewelry consumption within the country, it's gold jewelry towards in the south and studded jewelry in the north. So the more you expand in the north, you will have to have more studded jewelries, and that will give you much better margins. So so that's how it you have to look at it.
The strategy is absolutely key.
No, I'm just wondering if Sajid's wife is listening to this conversation and if she has any points that she wants to make.
From South.
Exactly what I was saying. So gold jewelry is on the cards for Sajid.
And absolutely, whether this is able to actually make an investor's portfolio bright and shine is something.
But we have alternates, gold bond, gold
bond. So yes. that last issue was an interesting one to watch. But I think we're just a few minutes away from the start of trade, and we've had an interesting show. Sajid, thank you so much. And also, viewers, thank you so much for tuning in. There's a lot more that we will bring you over the course of today. And do remember, we've got an Ask BQ edition at 12 p.m. at 12 noon today, and we'll be taking all of your questions about HDFC and HDFC Bank. So if you have a few shares that you would like to know what to do with, tune in and ask your questions live.